Good day, guys. How are we all doing? I'm a bit late to the charts of the day, but let's see what we can get. All right, let's see who's joining. Who's joining? Okay, no worries. All right, so we're going to kickstart with C300. I remember C300 yesterday. We had okay, just by looking at the charts, you can see the markings we did yesterday. We were looking for safe sales below this zone. They never came. We're waiting for price on this imbalance here. Price never came. So on C300, it was a no trade day yesterday. So let's see what the daily is showing us today. Most likely price can thank you for joining, bro. Thank you for joining. Welcome. I've just started. So I'm just looking at C300 today. So two things can happen. Again, we are on the top side of the 13 EMA, meaning we are bullish, but at the same time, we've taken out liquidity here. So as much as price can continue pushing up, we can still be open to seeing that retracement before price continues pushing up. So I would say I'm open to seeing sales, but at the same time, price can just decide to push up. So since we are like in a 50-50 bias, the best time frame to use would be the H1. So all we need is for price to be below the 13 EMA as it is now. We've got yesterday's high, a drop. Price is sort of moving slow. So it's not really convincing for me that they actually want to sell. But anyways, if we happen to break today's lows, which is also on this order block. So at the same time, price might actually be held by this or be held by this so that it actually continues pushing up. So just bear that in mind. So if we get any sells, I'm looking forward to sell below the zone. But again, it's going to be short-term sell until I get something solid. So for now, the setup is almost like 50-50. But if we happen to break today's lows, I'll be looking forward for a short-term sell. So I'll keep updating on this one because my view might change based on how the H1 will be moving. So I'm going to leave this on H1 so that I can just monitor how price plays around this area here. So going to see 1000. See 1000 yesterday. Remember, we had this zone marked, I think, from H4, if I'm not mistaken, either H4 or H1. Let's see. Okay, it was actually a higher time frame zone. Okay, it was this zone. You see this zone coming from this area here, this gray zone. Price actually came into that area. That's where I was looking for sells. So what happened is I was looking at price action right where you see those red lines. But if you notice, the setup ended up playing very late into the night. So initially I had this first high. So from this first high, my order block was here and I was waiting for a break, possible retest and a drop. It never came. They actually decided to extend the high right here. So you might have used this as an order block. You might have used this. There's also a few imbalances there which were also tested, but I did not take this trade because of the time. I think it happened very late, either around swap time or just after swap. So I did not take the sell. Looking at it today, most likely, looking at the price, you can see I already marked this red line here. That's an order block right there. So if you can break below 54.58, if we can come below 54.58, I'm definitely selling. Definitely selling. By that time, H1 will be below the 30 EMA. That 54-58 area is this order block you see here. So once we break that, I'm looking forward to sell. And I'll just be targeting yesterday's lows, maybe this order block here in terms of a TP. Let me just see how the daily is looking. So from the daily as well, you can see we tapped into the 13 EMA, hence we got that sell. But at the same time, like I said, yesterday, price might also respect this particular trend line, this zone where it's currently at, and they might push up. So we are open again to see this go either way. So in terms of us getting a better trade, I would say let's also leave this one on H1 so that we can just pay attention to this order block here. So C3 waiting for price to break today's lows. C1, waiting for price to break 54.58, which is an H1 OB. Then C5 looks like we're getting some movement now, but we need some confirmation. So we have a break of an order block. Let's just see H1. H1 sort of looks like it's the one sort of forming the pattern which we have on M15. So we still need to wait for a close here. But again, we might actually end up getting a sell. But this particular asset has been steady pushing up. If you notice from the past couple of days, right from this zone here, we've been failing to come below this zone. Even yesterday, price just triggered up. You can see I had these lines marked, but no setup formed. So yesterday was a no trade day for C5. So today, again, we're still waiting for more confirmations for us to actually sell. Otherwise, this price is steady pushing up. So if we do get a sell, just be careful with that sell because it will most likely be short term. Also keeping an eye on that second red line there. What will happen on C5 is if this price decides to sell at any point, this sell is going to be a very quick drop. That's what I feel like could happen. Because if you notice, prices retrace back into a broken level, which is right on the 50% fib retracement. Let me just zoom in right there. Right on the 50% fib retracement. So we'll just see. We'll keep stoking again. And I think I'll rather wait for the daily candle to go bearish again for me to consider sells. It's same as yesterday. Remember yesterday we were looking at it and we're like, you know what, this price has been steady pushing up. So if we're going to sell it, we need price to come below the day's open price. And we're at this gray zone. And if you notice from our markings here, we're stoking, but they never came below that zone. And we never had a setup. So same thing applies today. I still want to see this price come below today's open price. If it also breaks this order block, I'll be interested, but I want to see. Okay, H1 is just closed actually. H1 is just closed. So we could, based on this price action, we could get a sell, but I still need more confirmations here. I'd rather wait for price to break the order block number one, which is the second red line. This one, I'll just remove it. This red line, you see, I want to see price break. And if we can come below today's open price and get a retracement, this particular setup, I want to see a retracement, then I'll consider selling. So this area here will be my point of interest. That area is where the price also opens. It's also in line with yesterday's high. So this whole area price might also trap around this area a bit, maybe come slightly above if we are going to sell. But I'd rather see, I want to get an impulsive move first. Maybe break this structure, get a retracement. If that retracement holds, we are going to sell. Then we're going to be watching today's lows. If we happen to break today's lows again, then we'll most likely get a continuation sell. But at the moment, I'd say let's rather be patient with it a bit. Let the dealer show us their hand because they might just give us a setup like this. You can see here we broke an order block, but the setup failed. So the same thing can also happen here. Price might still actually fail and continue pushing up. So let's just be patient with it. What we need is a good impulsive move, a nice retracement, and a sign that the price is actually going down before we decide to take any sells. So this one I'm going to leave it on M15. Then going to B5, B5, B5. We actually had a quick buy yesterday, if I'm not mistaken. A very nice buy. We were targeting about 30 pips, if I'm not mistaken. Of which I ended up advising people to actually scale out because I was looking at how price was reacting right on the 13 EMA here. And our entries were, let me just zoom in a bit so that you can see where we had the entries. So this is the price action we had right here. The pattern was there. This was during our Zoom also. The zone held. We broke a level and we broke this one as well. So as price retrace are also added. So when this move eventually happens, when we moved from here to here, I was already starting to scale out, and I was looking at yesterday's low because we also mentioned that okay, price might actually hit the previous day's low. Then they might actually then continue with their sell since it was in a sell motion. So we also advise people to scale out and to close the trade when it reached about 54.85. That was my main target. We were also looking at 54.95, but as soon as we got here, as soon as I saw what price was doing, I decided to collapse that trade. So looking at it today, what do we have? So jump to the daily. We made a move yesterday's markings. Okay, so again, you can see we are bearish from a higher time frame. So any buy we take until we confirm a reversal, any buy we take is short term. So for now, again, price will most likely trickle down. We can only consider buys if the daily candle turns bullish. Then we can look forward to a short term buy, and price might still go back to the 200 EMA on the daily. So I'm still open to seeing price get to about 55.15 as a TP. Right now we're on 54.17. So it's a 100 pip move. But if we catch it from round about the open price back to that 200 EMA, we should get about 70 points. So out of those 70 pips, if we can get about 40 to 50, that will be perfect. But we can only buy if the current daily candle turns bullish and it will be a short-term buy. Otherwise, this price will most likely continue being bearish. Even on the H1, you can see we are currently trading below the 13 EMA, showing that we are bearish. But again, I want to see how price will act here. I think other guys caught a nice buy here. Here there was a short-term buy. You can see lowest low, a break of an order block, and a retest. This was a clean pattern here. So as long as you understand what price is doing, it's always good to trade both ways as long as you understand what's going on. So liquidity was just above here. You could have also been aiming for this level here, which was also a target from yesterday. So like I said, I still want to see how they act with this order block, because as you can see, it's been holding price on this past couple of pullbacks here. So if this level holds again, I'm still actually going to attempt another buy. This will be the target area, but we'll just see. At the same time, if we're going down, just take note that this is an order block. So if we react here, we might still just come back here, then continue dropping. So we'll still need more price action. We still need to be patient with it. But again, I'm going to leave this on H1 so that I can just monitor this price level here. So that price level is 54.05. We just want to monitor. If it holds price, then we're going to look for buys. Then going to B1000, I was looking at it earlier. I actually thought they were going to push up after breaking this gray zone, but they didn't. And yesterday we wanted a buy, but what ended up happening is our price had a lot of momentum coming from this zone. We had a lot of momentum. So depending with your trading edge or with your trading system, sometimes you can jump in, but at the same time, you should be open to getting those retracements into the points of interest. So on our side, I was waiting for price to get into this imbalance. They did not come there. We continued to break this level. We broke this level. So when we came up here, I was also anticipating another drop either into this area or this area. So price again did not come there. Continued pushing up. Here they triggered more buys, and I was like, okay, maybe they might react on this area, of which they did initially, but there was no follow through. Price then just melted going down, and all these places were just invalid. So sometimes that happens. You just need to show up with proper risk. And if your trade hits stop loss, that's fine. Your risk is managed. If you miss a trade, that's also fine because your capital will be protected. So looking at it today, there's a lot of markings here. Let me just delete a lot of markings. We've been actively trading B1 for some time. The only marking I need right now is 16,000. That has been my best friend for quite some time. Maybe in this zone. So let me quickly these multiple lines we have here. Just a moment. So for those who don't know how to remove this, if you're on MT5, it's actually a lot. I've got more than 100 markings there. But if you want to delete, you just I'm not sure if it's visible on my screen, but you right click, then you click object lists on the current asset you have. You see all the trend lines, all the lines you put on the asset. Then you can just start deleting all of them. You can see some of them are starting to disappear. It's quite a lot, but we're almost done. Okay. The reason I'm removing them is because I just want my chart to be a little bit more clear. Okay, there we go. Done. All right, so let's just start from the weekly fresh analysis. So from our left, oh, these are the highest highs. That's number one. These are the highest highs. So from our left, I'm going to zoom in again. I'm going to mark this high. Right here, this weekly move left this imbalance. I'm sure we can both see that there's an imbalance here, which is a fair value gap between these 2 weeks here. So currently, in terms of a higher time frame, price is currently in a point of interest. But at the same time, price can still go deeper to interact with the 13 EMA, which means we cannot immediately buy. At the same time, TDI is showing us divergence. We've got a lower low right there, and we've got a higher high right here. So for me, that's a divergence setup showing me that price might want to reverse. So if this price is going to reverse, we're going to see that by seeing price come below the imbalance, probably retest it and continue pushing down. Then that will be a bearish trend right there. So if this FVG fails to hold, price will most likely uh, push down. But then going to the daily, let's see what we have here. So on the daily, we are right on the 50 EMA, right? So if we look to the left, what do we have? We've got okay, let me remove this trend line before it confuses us. Okay, we've got this last high here, then price started trickling up. So from the left, again, you can see that we've broken an order block. So this lines up with a high time frame potential of a sell, which could happen. So from this, we broke a structure here. Again, price can still retrace. So we are literally open to seeing anything happen here. And again, from our analysis yesterday, we mentioned we are trading below the we are trading on the 50 EMA, between the 50 EMA, which is a dynamic support, and we are trading below the 13 EMA, which is a dynamic resistance. So as long as we are within this area, there won't be any clean trend or any clean long-term trade until we break out of that area there. So jump down to H4. Let me just highlight which area we're looking at. So that area, we're also looking at this high, and we are looking at let's use this one, this low here. Okay, so that looks like a range which we have to break out of before we start getting the best setups here. So jumping to H1, you can see that range there. So again, if price can take out these lows, maybe come back into this area, give us a pattern, we can still get a short-term buy with price targeting this liquidity and this high here. We are still open to getting a buy, and that's on the 4-hour time frame. But as it stands, it looks like we are actually bearish. And from the daily, there's no bias. The past 1, 2, 3, 4, 5 days, there's no bias there. So a no bias day simply means our best time frame has to be the H1. So on H1, we simply have to wait for price to come back above the 13 EMA for us to get buys. As you saw yesterday, we're literally above here with a nice stop hunt and a pattern formed within there with a break of an order block. Unfortunately, there was no retest. That's why we missed. Right. On my side, my system mainly works with retests. Sometimes I catch those breaks without retests, but most of my setups, they need a retest for them to actually be valid. So today, Same thing, wait for price to come above the 13 EMA. Then if there is a pattern, then we can consider taking buys. But as it stands right now, we've got nothing until maybe price comes around these levels, which is coming from the low of this day. This was the 8th of June. So from here, this day liquidity got taken and the pattern formed, but I just wanted to highlight that's the level I'm using. So I'll just be patient to see maybe an intraday reversal if we do get to this area, or otherwise wait for price to come back above the 13 EMA, then look for a pattern, then look for a short-term buy. So for now, again, I'm going to leave this on H1. Then step index. Yesterday, what were we looking at? Let's see. I don't see any markings here. I remember we mentioned let's wait for the daily to close. Yeah, I remember mentioning that. So the daily close strongly above the 13 EMA, showing that price still wants to come to that gray zone on top there. So we are open to seeing a bullish move today. But at the same time, remember we broke levels. We broke an order block. We also broke an order block here. So these are points of interest where price can most likely retrace to before we actually get a buy. So just mark those on your charts. This is the daily, 2 order blocks. Then from the 4 hour, you can see the levels there. So this is a clean level which was broken. There's no retest here. So we are open to seeing price come a little bit deeper before we continue, which will also give us an ID50 type of setup for those who use BTMM. Then from the far left, this broken level as well. If there is momentum in the market, price will just bounce off here, which is right on the 13 EMA on the 4 hour, and we'll get that push back into this gray zone. And if we happen to break it, we'll continue looking for buys in the next couple of days. But for now, I'll say these 2 red lines are my points of interest, and I would love to get a retracement coming back down here. So from wherever price retraces from, you can also run a fib. So if let's say they do retrace from here, you can see our points of interest. They lie right between the 61.8 and the 38.2. So that will be points of interest for us to actually get a nice buy. But otherwise, let's keep stalking on this. Let's see what the dealer wants to do. They might also decide to just push up. As we see, we are trading above the 13. So if we break the current highs of the day, we can look for a buy. If we break the current highs of today, we can most likely look for a buy. So what we need is a break. Then we look for maybe an imbalance or an order block. So we wait for the retracement. Then if the level holds, then we can buy comfortably. Otherwise, the price might still retrace down like we mentioned. So we're going to leave this again on H1 so that we can just monitor price there. Then going to J10. I remember yesterday H1 was our best time frame. So what happened is price came back to the 13. They broke an order block, then came below the 13, below the order block. So now it's in a sell motion. So the reason I always say let's wait for the dealer to show us their hand. This is the reason. You want to get an impulsive move showing you direction. That's bias. Once you get an impulsive move and you get a bias, then you can start looking for things to work with. So from this particular setup, what could we have worked with here? So first thing, you could have run your fib to this low and just drag it into the future. If you notice, price retrace right to the 38.2. Clean fib retracement right there. So number one, you could have used your fib. So let me just write it down. If you get an impulsive move, that is, you can run your fib. Then number two, you are looking for OBs. The order block can either be on H1 or it can be on M30 from H1 going down, any of those time frames. Then on the third thing is you need to look for an imbalance, which is just like a fair value gap, or any zones which are broken, minor zones which are broken within here. So you see these zones. So it's fair value gap then for any zones you see, then you can use those zones as points of interest. TDI, you also see right here, we were now below the yellow baseline, which was somewhere around here. So that confirms your bias. So once you confirm that, jump to M15. We're now looking for a pattern and an entry. So from here, you will notice that price trickle. There was nothing clear here. An initial break of an order block was here. But if you are doubting this, you can leave it. Wait for that impulsive move to happen. Then look to your left. So remember on H1, we had an order block. I think it was lying somewhere around here. We can just go back to H1 so that you guys can be able to see. You can see this black candle before this highest high was set. That's the whole zone. That whole candle is your whole order block right there, just like that. But what I usually do is sometimes I just like to mark, because you see this zone when you go to a smaller time frame, it's a bigger place, it's a bigger space. So what I usually do is I just like to mark the low of the order block. You can mark the wick, you can mark the candlestick body. It doesn't really affect the setup as long as you know what you're looking for. So after that, you can see price broke the order block, then they retraced. As they are retracing, we have our fib. Price gets into 38.2. What do we have on the M5? On the M15, sorry. On the M15, you get this nice rejection. And on that rejection, you will notice that this is the rejection right there. On that rejection, you notice we've got an order block here. We've got an order block here. So if you're still not sure here, just wait for the order block to be broken. Then take your sell. So on this particular trade, if it's a second impulsive move, this was the first, this is the second. Do not wait for a retest because sometimes they'll just drop. So these are some of the instances whereby I'll just like sell without waiting for a pullback, because sometimes the pullback will never come. So that is a full explanation of yesterday's trade. We had no buyers. I remember we had no buyers, and H1 was our clue to know whether we're selling or we are buying. So again, we come back to today. Price can still push up, can still pull back. Almost looks like the other asset which is trading below between the 50 EMA and the 13 EMA as well. So I would say it's a no bias day. And again, H1 is going to be our best friend on this one. So at this point in time, we are trading above the 13 EMA. We do have this order block which price has left. Just now, it looks like it was retested here, but let's confirm. Not a clean retest. So here's how I'm going to approach this. If I want to trade J10, I would prefer to wait for price to retrace back into this order block. Remember, it's a H1 OB. At the same time, we do have an M15 order block right within that H1 order block area. So what you want to do is you want to mark that area. So this is a point of interest. So we just keep it simple. If price comes here and respects it, we're going to look for a buy. But if they break below and stay below, then this trend could most likely be changing and we'll start looking for sells. So if you try to keep it simple like that, I think it's better. But as it stands, we are bullish. You can see from the open price, it's a high, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. Here price is sort of starting to go sideways. So they could reverse, they could trap, then continue up. So a lot can happen here. So it's always good to exercise extreme patience as well. So let's say you were on the charts earlier, how could you have taken the buy? So initially, you could have waited for a retest here, which never came. We're just going to extend that zone. When price created this next higher low, this was the high. So just mark that high there. Then at the same time, we also had an order block. So you want to use everything you know. So here's also what happens. Sometimes price will break a zone and they'll just retest right at the top here and they'll continue pushing up. We won't know what price will do until it does it. So because some might always ask, some people ask, how do you know price is going to react here or price is going to come to the order block? We won't know until price does the thing. So in this example, we retrace after breaking this level. So a setup was forming at that point. If you decide to take a buy here at the break, there's nothing wrong with it. Just remember your stop loss is to go below the last low or below the range. That's it. So If this pullback comes, you can see it didn't take us out. So if you understand that, okay, price has hit an order block, then you can still add, maybe take another buy here. That will be perfect as well. So right now, jumping into the buy, you can see it's already, it will be a late trade, or it will be a late entry into the trend, because already we had an impulsive move, we retraced, impulsive move, we retraced, impulsive move. So already we've had one, two, even though this was small, I think I'll count it then number three. So yes, we might have a fourth impulsive move, but now the chances of it happening become low since we do not have a bias. You get it? On a day when you have a bias, price can simply continue doing this for the whole day, pushing up. So it's a bit different. But when you have no bias like this, price can turn at any point uh, without notice. For example, yesterday we were pushing up nicely, same pattern. But as soon as we got here and we created this level right here, you can see price then failed to break this high. Once price fails to break a high, and they start breaking a low, creating a lower low, just know the trend has changed. And if you're using the 13 EMA on your H1, that will sort of help. But if you're using a naked chart, then these levels should help. Just mark your high highs, high lows, understand what price is doing for that particular time. If the price delivery changes, for example, here, you could have run your fib again, and you could have I'm sure it gave a nice entry. Let's see. You can see price retraced into the 38.2 and the 50 level, which was also in line with this order block, like we mentioned. So once all these confluences line up, TDI is trading below the yellow baseline. We've got a baseline bounce. We've got a baseline bounce. These are all confirmations. So here, nothing too clean. Even for the buy, nothing is too clean here, unless you had taken this one, because here we had a nice variation of a shark fin. So unless you had taken this buy, that would have been perfect, because right now you would still be in this trade, maybe trailing your stop loss, either just below this level or maybe below the zone. That would be perfect. But in terms of taking a trade now, I'd say let's rather wait for price to get into the zone. If it will, then we can look forward for a continuation. If they come below, we look for sells. If this price decides to interact with yesterday's high or interact with the 800 EMA, then this will be the highest high. We can locate an order block imbalance, then we can start looking for a potential sell. I think that's how best you can actually approach J10 if you are trading J10. So again, remember, you need to understand how all these assets move. If you're trading J10 especially, this sort of does spikes in both directions sometimes. So always make sure you have your stop loss in place if you're trading J10. You can see it sort of gives like spiky moves like your boom and crash, but they happen on both directions. So if you're in the right direction, it will pay you quickly. But if you're in the wrong direction, it will also humble you quickly, and there is slippage. What is slippage? Slippage is when, let's say you were selling here for some reason, you've got to sell, and your stop loss is here. When this candlestick opens, remember it's a spike candle, it's going to move your stop loss from here to here. That's its slippage. Slippage is when price reprices at a faster pace, and the next captured price becomes this price. So your stop loss will be moved from here to here. So when it happens, don't say it's the broker trying to take your money. It's just normal things which happen in price. So if you're trading J10, be very careful of that, and try to use proper risk management. So I just thought I should share that with you guys. So that's it for J10. I'm just going to leave it on M15. I'm not actively trading this today. I don't think I will, but I'll keep an eye on it. Step index, we are waiting for a break and a retest of this high, or otherwise a pullback before the continuation of the buys. That's also a potential there, so we'll keep stalking. B1, we're waiting for them to come lower or at least come above the 13 EMA. So stalking, nothing solid there. B5, we're waiting to see if they are going to react with this level, which they've been respecting. So we'll leave it on H1 until H1 gives us a candlestick we understand, or a candlestick pattern we understand like this or something like this. We cannot buy. But if they do give us those candlesticks, then we can look for an M15 pattern, look for a short-term buy. Then C5 actually broke as we were talking. It's said none of you guys actually mentioned this, but anyways, it's all good. We are going to wait for a potential retracement. Potential retracement back into this order block, then we can look for a potential sell as well. What I also have here, you'll notice we've got TDI divergence, equal highs, almost equal highs, and a higher high here. So that's our divergence setup, which shows potential of a sell. So again, like I always say, sometimes price, you can take your sell right on the breaker. But again, in this example, you see your stop loss is to go outside the range. That's why sometimes we wait for a pullback so that when we get that sell, we can have the stop loss right above that low and we have a lesser risk and a higher reward. So that's what I'm currently waiting on C5. Then C1, now waiting for price to break the breaker on the bottom, to break this order block on the bottom for it to become a breaker. Otherwise, we're going to wait and see what they want to do at the top here. Maybe we can still be able to get a sell. So you can see most of these assets we're just talking. C3 also waiting for a break before we enter. So we've got nothing solid, nothing active, stoking all assets until we get something solid. C5 for now is the one which looks like it could be in play soon if the price holds. But if somebody was looking at it, maybe we could have scalped, especially after this break. Where we could potentially have scalped. It's almost it's 15 pips now. They can actually get all the way to today's lows or the moving average, which will give 30 pips. But let's wait for the pullback. If we can get a pullback, that will be perfect. So on M5, you also see we do have an order block there. So we are not using a sell limit here. We actually need price to react first before we sell. So either they will react at this level or they will react at the M5 level, but we'll just see. We still have to wait for price to actually give us something. So on this one, we're going to leave it on M15 so that we can stoke for a pattern. And I think the rest I've already done a recap. So I don't know if there's any question. A quick question. I'm only left with 2 minutes in this session. Let's see. When to take a trade if FVG and order block are close to each other? Okay. Do you have an example which I can quickly look at? What can I look at? I usually prefer. Okay. Let me see if I can quickly do an example which had a fair value gap. Maybe B5. Okay, B5. We have this low, we have this order block, right? And we've got this imbalance. So where do you take your trade? If you're confident with the buyers, whatever the price hits first. So in this example, we've got a fair value gap and an OB right on the same area. So what you can simply do is if you're confident with buyers, the first buy has to be right on the top of the fair value gap. On this example, they are right on the same spot. So that's where your buy starts. Then if there's something on a smaller time frame within the fair value gap, you can use that as a buy limit. Then your stop loss goes outside the range of the fair value gap. I'll try to drop you some examples in the group because I feel like we're running out of time here because there's a lot of variations. And I also sent something yesterday. If you check in the group, I sent something with better examples in terms of fair value gap and order blocks. Please check yesterday. I think it was 4 or 5 examples of the wrong setups and the correct setups. Please check that, but I'll drop some setups for you. It is a good idea to box candle weeks. Okay, all right. I think we're running out of time, guys. Let's continue this chat on Telegram. I'll try to drop a few more examples. So thank you all for joining. We are going to have a productive day. We'll be on New York session just now. So enjoy the rest of the day. Good trading.